Now we're going to look at exercises 3.9 through 3.12 since they're based off of the same question stem and data. And again, what we're doing here is comparing and contrasting absorption costing to variable costing. Exercise 3.9 and 3.10, we're going to calculate cost of goods sold under absorption costing first and then variable costing. Absorption costing, again, that is your more traditional approach to costing. That's what you would see in externally filed financial statements under GAAP. Variable costing is an alternative, not permitted for publicly traded companies, so therefore it's not used on externally filed financials, but it can be used for internal purposes to give more insight, especially if your product is mostly driven by variable costs as opposed to the more traditional method under absorption costing. So the question reads, Monkey Inc. produces and sells toys to children of all ages. They manufacture toys promoting coding to young children. They are organized such that each product is produced in a separate department. One department produces a product, the Cody. The Cody helps children identify patterns and allows them to enter sequencing of actions to achieve an objective, mimicking writing code. So during the month of July, costs incurred in the Cody department are as follows. So we see direct materials of $12 per unit, direct labor of $10.50 per unit, variable manufacturing overhead of $625 per unit, fixed manufacturing overhead of $35,000 in total. Key there. During July, the Cody department produced 7,000 units and was able to sell 6,500 of them. So based off of this information, we can calculate cost of goods sold under both the absorption and variable costing approach. So in calculating under absorption costing, our first step is to calculate that fixed cost per unit. Notice that in the question stem, it just gave us the total. We want to convert that to a per unit amount. Simply how we do that, we take the total fixed costs of 35,000. We divide it by the units produced. I know in the question you got two sets of units information. You got 7,000 units produced and 6,500 units sold. Obviously, that 35,000 was incurred in producing 7,000 units. It doesn't relate to the sale there, so that's why we're using the 7,000 as the denominator. We get $5 per unit as far as the fixed manufacturing overhead. Remember our formula for determining absorption cost, in this case per unit, it's all your product costs. It's your traditional product costs. It's your direct material, it's your direct labor, and it's both your variable and fixed manufacturing overhead. So direct material per unit was $12 a piece. Direct labor per unit was $10.50. Variable overhead of $625, and we just calculated fixed manufacturing overhead per unit to be $5. So under absorption costing, we get a product cost per unit of $33.75. Now it wants us to calculate cost of goods sold. So under absorption costing, we're just simply going to take the units sold, which will obviously be the same regardless of what method we're choosing, which was 6,500 units. And we're going to multiply it by our absorption cost per unit, which we just calculated to be the $33.75. We go through the math there. We get a cost of goods sold of $219,375. And again, that would be in your absorption costing income statement, the amount you would see for cost of goods sold. Exercise 3.10, again, it is the same information, the same quantitative information. It wants us to calculate cost of goods sold on the income statement under variable costing. Under variable costing, our product cost is just that, all of our variable costs. So direct materials, that's going to be variable. Direct labor, that's going to be variable. And variable manufacturing overhead, obviously, that's going to be variable. If there were any other variable costs here, then we would include them in this calculation to determine our variable costs, product cost per unit. In this case, these are the only three variable costs identified in the question. So we have direct material of $12 a unit, direct labor of $10.50 per unit, and variable manufacturing overhead of $625. So we get a variable cost per unit of $28.75. So the biggest difference, the only difference between the variable cost per unit and the absorption cost per unit was the fixed manufacturing overhead of $5 a piece. So to calculate cost of goods sold under variable costing, we take the number of units sold, which is 6,500, and we multiply it by the variable cost per unit, which we just calculated to be $28.75. We get cost of goods sold under variable costing of $186,875. So the biggest difference again between the two, that about 40,000-ish is the fixed manufacturing overhead. Now, exercises 311 and 312 are asking the question, how much fixed manufacturing overhead is going to end up on the income statement under both costing approaches? 311 is obviously dealing with absorption costing, 312 with variable costing. Under absorption costing, the amount of the fixed manufacturing overhead that's going to be on the income statement, well, you have to ask yourself, under absorption costing, what kind of cost is fixed manufacturing overhead? And remember, under absorption costing, fixed manufacturing overhead is a product cost. And now you have to ask yourself, how do product costs end up on the income statement? Product costs only end up on the income statement when the inventory is sold. We calculated the fixed manufacturing overhead up top to be $5 per unit. That $5 per unit, or that fixed manufacturing overhead, initially starts out on the balance sheet. It is an inventory cost, it's a product cost, so it's going to be part of inventory, which is on the balance sheet. It only moves from the balance sheet to the income statement when the units are sold. Because of that, we sold 6,500 units. So for every unit that's sold, we will move $5 of fixed manufacturing overhead from the balance sheet to the income statement. That means we will report, or included in that cost of goods sold on the income statement under absorption costing, there will be $32,500 worth of fixed manufacturing overhead. Notice it's not the entire $35,000. There's $2,500 left over, and the reason is because, remember, we didn't produce 6,500 units. We produced 7,000 units. If we produce 7,000 units, we subtract from it the units that were sold. That means there's 500 units left on the balance sheet, and each of those units have allocated to it $5 in fixed manufacturing overhead. That's why there's a difference between the amount of total fixed manufacturing overhead incurred and the amount that we're going to report on the income statement. That $2,500 is going to still remain on the balance sheet as part of our inventory costs under absorption costing. Now contrast that to exercise 312, where it asks us the same question, but now we're assuming we're using variable costing. How much fixed manufacturing overhead are we going to expense or report on the income statement? You have to ask yourself the question again, what kind of cost is fixed manufacturing overhead under variable costing? Under variable costing, fixed manufacturing overhead is treated as a period expense. And we remember with period expenses, they are expensed immediately. They don't start out on the balance sheet and then are removed to the income statement only when items are sold. No. We skip all of that. That 35,000 in fixed manufacturing overhead under variable cost is going to be expensed immediately. So whether we sold 0 units up to 7,000 units, that fixed manufacturing overhead of 35,000 is going to be expensed immediately, meaning it's going to show up on the income statement in total immediately during the month of July. That's why under variable costing, all 35,000 of fixed manufacturing overhead on the income statement will appear on it, with none appearing on the balance sheet.